Um, Dear friends, very good morning to every one of you. I am really happy to handle the class for you today related to the double accounting system, particularly that account for electricity companies. So we have already discussed about what is the meaning of double accounting system. And here also I want to explain once again about the meaning of double accounting system. And that this double accounting system is followed by public utility companies or concerns. That is not purely for profit motive. Sometimes based on subsidy also. The public utility concerns are like that electricity companies, then water supply, gas supply, etc. So these companies to be prepared the final account, non-double account and double account system. Okay. In that we have to specifically know about the account for electricity company. Okay. Account for electricity company we are going to study today. That this account electricity company are controlled and governed by, directed by two acts. One is the Electricity Act of 1910 and another one is the Electricity Supply Act of 1948. So according to Schedule 6 of the Electricity Supply Act, this final account to be prepared, a format is given. That is also the format same to the other public utility concerns. That final accounts are like that of revenue account, that for profit loss, to know the profit or surplus. That is classified into revenue account and net revenue. And balance sheet means balance sheet is divided into two categories. One is the receipts and expenditure on capital account. Another one is general balance sheet. That's why we are calling that double account, because the balance sheet is divided into two. That is why the name has been given for that accounting system. Here already I have discussed about that, about the final accounts. That accounts is also applicable here. I have to explain about the another important one is about the resource, how the resource to be maintained. That only we are going to study today. Not a difficult one. If you systematically know that, only it is easy to learn for it. Okay. Right? I think in the meantime I may ask question to you. So be very cautious and very observant to that particular point. Right? In this, there are 6 different types of resource. That resource, I think that reward to efficiency. Another one is tariff and dividend control reserve. Third one is consumer benefit reserve. Fourth one is development reserve. Fifth one is that development reserve, then contingency reserve, then final one is that general reserve. So once again I am telling you that what are the different types of reserve. One is the reward to efficiency, another one is tariff and dividend control reserve, and the third one is the consumer benefit reserve, fourth one is the development reserve, fifth one is the contingency reserve, sixth one is the general reserve. Okay. The first 3 reserves to be maintained only when there is surplus. That is disposal of surplus zone category. And in case there is a surplus only, that concerns to be to prepare, provide, need to provide that kind of reserve, otherwise that not. What is surplus and what is disposal of surplus? Let us know. So surplus means when the company's clear profit, that is profit to be transferred to the balance sheet, is more than the normal profit. Okay. That is the surplus here means not difference between income and expenses. Here what it means that difference between the clear profit or actual profit minus normal profit. Normal profit you have already studied. It is profit to earned by the company. Profit the company should earn or can earn on the basis of the rate of return of the industry. Okay, rate of return of the industry. So industry is giving a return of 15%, and the capital of the company is 60 lakhs. Then the profit should be 9 lakhs. Normal profit is 9 lakhs. Whereas the clear profit is 10 lakh 50,000. Okay. Clear profit is 10 lakh 50,000. Normal profit is 9 lakhs because the total capital invested is 60 lakhs and normal rate of return is 15%, hereby 9 lakhs. So here 10 lakh 50,000 minus 9 lakh means 1 lakh 50,000. That is a surplus. Okay, that is a surplus earned by the electricity company. In case the surplus earned only, the company should provide these three kind of reserves, that is reward to efficiency, second one is tariff and dividend control reserve, fourth one is consumer benefit reserve. So this is called as disposal of surplus. Okay, disposal of surplus you are doing. Then how it is that how that much portion is shared by how much portion is shared between these resources. To these three categories of resources. First one is that reward to efficiency. So that 1/3 of the surplus should be reward to efficiency. Okay. 1/3 of surplus should be reward of the efficiency, and that too, it should not exceed 5% of that normal profit. Okay. That's why it is classified separately. First one that means 1/3 of the surplus. That I have told that we have earned a surplus of 1,50,000. In that 1,50,000, what would be the 1/3? 50,000. Sorry, not 50,000. So 1,50,000, isn't it? 1,50,000 means definitely 50,000 is 1/3 to be transferred to the reserve for efficiency. Reserve reward to efficiency. Transferred to reward to efficiency. And that 50,000 should not be greater than 5% of the normal profit. That is more important. If the normal profit, 5% of the normal profit is say 60,000, then you can distribute 50,000. 5,000 of, that 5% is 40,000. 5% is 40%, you should not distribute that 50,000 to the reward to efficiency. That you only have to limit is 40. Okay. Now that second reserve, and then out of the remaining 2/3, 50% of should be transferred to tariff and dividend control reserve. Okay. Then we can see what is tariff, dividend control reserve. So when only there is a reserve available, a surplus profit available, the company should provide to tariff and dividend control reserve. In case that is more important. In case there is no surplus profit, then company should not provide it. And in case the company is going to sell to another company, then this that tariff and dividend control reserve should also be transferred. Should not be transferred to equity shareholders account. purchasing the company when that company is to be purchased by another company. Okay, that's more than. And then out of the 2/3, 50%. 50% of the 2/3, third reserve to be created, that is the consumer benefit reserve. Okay. Then what are all the consumer benefit reserve means? Consumer benefit for the consumer for the conditions of that in the tariff and meter range. Some condition may be given if the company is maintaining so much reserve. Like that, in the tariff and dividend control reserve means, so tariff also they can utilize, for paying dividend also they can utilize. Then for the reward to efficiency means 1/3 clearly to be taken, but reservation 5% of the maximum limit, 5% of the normal profit, to be given for the benefit of efficiency. So some employees might have excelled in the working. Then they will be given that amount. They will be given that amount for as kind of some travel allowance or some kind of incentives like that maybe. For that only it will be used. Then let us see that the compulsory reserve to be maintained compulsorily. 3 reserves I told. The first one is the contingency reserve. Contingency reserve means total of the 5% of the total assets. Okay, contingency reserves to be maintained by a company, right? 5% of the total assets of the. But in 1 year it could not be created. But company can create 1/4%. Okay, 1/4% of the, that is more, 1/4% of the marginal cost of the assets. Okay, 1/4% of the marginal cost of the asset, subject to the maximum of 1/2 of the marginal cost. It would not exceed 1/2% as marginal cost of the reserve. It should be maintained year by year until the reserve should reach 5%. After that, there is no need for maintaining. But the marginal cost is improving, then accordingly the reserve to be maintained. So that the 5% level to be maintained. I think it is very clear for you. But I think this reserve, studying this kind of reserve seems to be somewhat difficult. But that's why I have mentioned 5% and 1/2%, 1/4%. Thereby it will automatically come in your mind about the meaning. Then next one is the development reserve. So by the development reserve itself, it is telling that development are acquiring fixed assets. When company are not particularly plant and machinery. When companies going to acquire plant and machinery, the development reserve should be maintained. But the real meaning is the income tax department is giving some kind of exemption in the payment of tax. Okay. Main purpose is for acquiring the plant and machinery. Thereby, that amount should be created. That amount should be, so suppose income tax department is allowing the tax maybe 50 lakhs, and income tax department giving a rebate about say 20 lakhs for the development reserve means that 20 lakhs may be taken, because instead of 50 lakhs they need to pay only 30 lakhs. Thereby that 20 lakhs may be utilized for the resource. Utilized for the purchasing of land and machinery in future, not any other purpose. Right. The last one is the general reserve. Okay, general reserve. In all companies should maintain, whether it is electricity company or not, they should maintain that general reserve. But we see that general reserve here is maximum 8% should be maintained, 8% of the original value of the fixed assets. Okay. 8% of the original value of the fixed assets should be maintained as the general reserve. But that you should annually, and that reserve should not exceed 0.5%, less than 0.5%. even 0.05%. And then up to say 1/2% of the cost of the fixed assets only should be made. Suppose fixed asset is value is 90 lakhs. Then what would be the 1/2%? 90 lakhs means 10% means 10% means 9 lakh. 1% means 90,000. Half percent means 45,000. So less than 45,000 to be maintained, only maintained for this reserve. For in case that value of fixed asset is 90 lakhs, original cost. But really, in the case of 90 lakhs means it should be 8 into 9, 72,000 rupees. 7,20,000 reserve should be there for that generation. 7,20,000 reserve should be maintained by the company as general reserve. But it should not be maintained all of a sudden. Yes, I am taking example 90 lakhs, but just to see what would be the value of the electricity in the plant and machinery and fixed assets, right? All lines, all posts, all transformers, all meters fixed in families. How much it will be? Crores and crores of amount. Thereby, it's not possible to maintain that 8% in at a time. That's why it is. So okay, thank you very much. I think this I have presented in a manner that so that everyone can be able to know it. I think all might know, able to tell at least one reserve. One reserve also, 6 reserve படிச்சிருக்கோம். We have studied 6 reserves. At least we should be able to answer for one reserve. If I am asking question, I know the condition. But I think from your response or from your observation, I observed that you followed 6 reserves. So let us discuss later. Okay. Thank you very much.